Welcome to the Investors Trading Academy event of the week. Each week our staff of analysts and educators tries to provide you with a better understanding of a major market event scheduled during the next week. This week we'll focus on the Bank of England. This month the BOE will be very active. Traders will hear from the bank on May the 11th, 13th and again on May the 20th. The bank will hold its regularly scheduled MPC meeting on Monday the 11th. Traders are hoping to see some indication of the bank's thoughts on rate increases, as more and more observers think that the members will raise rates in early 2016. The Bank of England's Monetary Policy Committee meets on the first Thursday of each month to set interest rates. The May meeting is a change-up from the normal schedule. The MPC's job is to keep price rises stable, and policymakers have an inflation target of 2%. A secondary part of its job is to support the government's economic objectives, including those for growth and employment. The MPC's 9 members have often been described as hawks, who generally favour higher interest rates that will keep the potentially damaging effects of inflation in check, or doves, who prefer to keep rates lower for longer in order to encourage economic growth. One of the best windows into their world is the minutes of these meetings, released 2 weeks after the MPC's decision. May's meeting will lead directly into the Bank of England quarterly inflation report, scheduled on May 13th. The Bank of England quarterly publishes a report of the detailed economic analysis and inflation projections on which the bank's Monetary Policy Committee bases its interest rate decisions, and presents an assessment of the prospects for UK inflation over the following 2 years. The Governor has warned households to prepare for higher borrowing costs in the coming months, but has often adopted a dovish tone during the bank's inflation report press conference. May's meeting and report will carry more significance than in previous months, as it follows just days after the national election, with a new government possibly taking over the reins. All 9 members of the BOE's rate-setting committee have voted to keep rates at 0.5% since the beginning of the year. 2 members of the committee had voted to raise rates in the final months of 2014, but changed their minds after the crude oil rout pushed down inflation. According to Monetary Policy Committee member Christine Forbes, a rate rise could come sooner than expected, amid low oil prices and standout economic growth in the US, points which could lead to greater investment in the UK. UK interest rates have been held at a record low since 0.5% for over 6 years, and analysts have continually revised their forecasts on when the rates will rise again. It was widely predicted that UK rates would rise in the first quarter of 2015. This was then revised to around June this year.